All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about stock splits and why they matter to you.
Yeah, and why apparently you can make money after them being announced.
Very true. If you guys are new here, we're all about educational stock market entertaining content. So by all means, like and subscribe below if you enjoy this sort of stuff. So we're going to get right into it today. You want to talk about a forward stock split, Dylan?
Yes, sir. So we're just going to go over some basics real quick, and then we're going to get into the possible strategies and how to make a bunch of money off this. Whether you agree or disagree with the catalyst of a stock split, all that matters is how much money you made or lost. So basically, a forward stock split, just real quick, is decreasing the price of the stock by increasing the outstanding shares. Our example is going to be Nvidia because they just announced one, and which is why I'm going to be investing on Tuesday. They're trading around $600. They're having a 4-to-1 stock split. So if you had 5 shares at $600, after the stock split, you'll have 20 shares, 5 times 4, and then 600 divided by 4, 150. Either way, you're holding $3,000 in equity of Nvidia. Okay. Now they have a meeting on June 3rd for approval, assuming it goes through, which I don't know why it wouldn't. It's going to happen on July 19th.
Nice.
And then, yeah, the two big things here. There's no change in the fundamentals or anything at all regarding the companies due to the stock split. There is a change that happens after the stock split is announced, and I may disagree with it, but I'm going to try to take advantage of it. And the main reason companies do forward stock splits is to make stocks cheaper for people like, me and Vinny.
Yeah, two stupid guys trading stocks.
Exactly.
Yeah. The basic analogy here is that, if you look at a whole company as like a pizza, all they're doing is cutting the pizza into smaller slices.
Right.
Yeah. So a reverse stock split, which I've actually been part of once, is when a company kind of is taking back the number of shares. So Citigroup did a 10-for-1 reverse stock split back in 2011. Their price had been severely kind of beaten down by the 2008 housing crash, and in order to get the price back up, they did a reverse stock split for 10-for-1. And that reason being is that they had to be above $1 a share to qualify still for NYSE listing. And then also many mutual funds will have as part of their charter agreement to prevent the money managers within the account from engaging in penny stock trading. They usually have a minimum share price, which is often, I guess, $5 per share is a typical one. So, Citigroup by falling below that was, precluding a whole swath of investors from being eligible to invest in their company. And by doing this reverse for 10-for-1 stock split, they were able to get their stock price back up, allowing all these other investors to now be allowed to invest in their company.
Right. So just to show you essentially why they do this for smaller investors, Apple, everyone knows Apple. They're like a huge company. They split 5 times. They did a 4-for-1 last year, 2020. They did a 7-for-1, 2014, and 3 different 2-for-1s, 2005, 2000, and 1987. So like I said, they make it cheaper for people like me and Vinny to buy. But what would they be worth had they never split, right? $28,000 a share.
Yeah.
I own 20 shares. Vinny probably owns 100 or 200 or something. He loves that company.
Yeah.
I'm not owning 20 shares if it's $28,000 a share.
Yeah. I have 120 or so. The other thing that this kind of makes the able to trade options on this, because I wouldn't be able to sell covered calls or trade options on my Apple stock if I didn't own at least 100 shares.
Right.
Yeah. So here's an example of a company that never split their stock. Berkshire Hathaway, Warren Buffett's company. The Class A shares, of which there's only 1.1 million in existence, currently trade for over $430,000 a share.
That's the dream one day, is to have like 10 of those.
Yeah, for sure. Yeah, it's insane. I think if you have 10 of those at that point, you get like Warren Buffett's personal cell phone number.
Sweet, that'd be great. Got a lot of questions.
Yeah, exactly.
So why does this matter? Okay, so Nvidia announced a stock split on May 21st. There was 2 big stock splits that happened in 2020. I'm sure there was more, but these are companies that are very well known. So I'm just going to show you whether you agree or disagree with what happened, this is the reality of the situation. I, for instance, think that this is ridiculous, but I'm also wrong. So let's go to the chart here. So Tesla, they announced their split on August 11th. So here's August 11th. Okay, we're at about a high of 284, low 273. The split goes through on the 31st. And what do you think happens? All the way to the 31st, which is this day here, they hit a 500 high. Okay, 273 to 500. That is, I don't even know what to say to that.
Yeah.
Like it's absurd. So here's this in a smaller time frame. Boom, 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 boom. It just doesn't make any sense to me. But let's go to Apple real quick. Let me zoom out here. Here's it on a bigger time frame, this giant bump that doesn't make any sense. 1, 2, 3, 4. Okay. Apple's dates. They announced theirs on July 30th. Oh, I wonder where it is. Okay. I haven't even looked at the dates yet, but I wonder what's happening here. So I'm going to zoom in a tad so we can make this a little bit easier. So July 30th here. Oh, they had a gap up. They just opened. Okay, so just to be clear, they're at $96. They opened at 102. They opened 7% the next day. Okay, that's great.
Yeah.
This went through August 28th. So boom, 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 boom. August 28th, it occurs, went up, and then a correction. So whether you agree or disagree with that, let me zoom out here. What do you think of that, Vinny?
Yeah, I mean that's a lot of euphoria. I think that's what you're seeing right there.
But Nvidia just announced theirs. Okay, here's this scary bar. They announced theirs here, this candle. Okay, so we're already shooting up. We actually closed at a high. So the thing is, do you invest now? Because theirs wouldn't go through for another month and a half. That's a month and a half of a possible run-up gain that doesn't make any sense or logic whatsoever, but it's still money.
Yeah.
So what do you do?
That's quite the conundrum.
Yeah.
Yeah.
I go back to that thing.
Yes, I kind of looked for a historical comparison here, and this is the best thing I found was I think it's from Zacks Finance, and they talked about a couple of studies that have been conducted by a university professor looking at stock split, and found that companies that had done a stock split outperformed the market by about 8% that year, and 12% over the next 3 years. Yeah, pretty insane.
That makes sense. Okay.
Yeah, I mean, the kind of companies that are doing stock splits are typically companies that are like the top of their game, basically, right? Like, we're not talking about a company that's, kind of on the down and outs, right? These are companies that are doing so well that their stock prices run up to a degree that they can now justify splitting it into small pieces. Nvidia arguably is crushing it in many aspects of their business at this point in time. Overvalued, in my opinion, but still
undervalued. That's fine.
Yeah, exactly. But the these are good companies if they're splitting their stock often. So that's part of the reason why you're seeing this outperformance for 3 years where they're doing 12% better. That's impressive.
Yeah, and just to throw that into perspective, Apple went up a lot. Tesla almost went up 100%, or like a full 100%. They didn't quite make it there. I actually, I might see a reverse split in Tesla's future. Probably not, but
Yeah, probably not. Pretty interesting stuff.
So I'm going to be throwing money at Nvidia. Like I said, I don't have to agree with should make a difference, but apparently it does. So I don't want to miss out on the trend. Another stock that I've been looking at is Amazon. So they did 3 splits, 1998. They did 2 splits in 1999, so that was interesting. And they haven't done one since, and they're at 3,200-ish. They go between like 2,900 and like 3,400. But it's very interesting because at some point you could almost throw cash at it, expecting a split. Netflix is another one that they're also higher than they have been, where if you were expecting a split just off the announcement, you're going to get like a 10% return. which is
True.
wild. So
Yeah. I've heard that rumor about Amazon a couple of times with the most recent earnings reports that like, maybe a split's coming, maybe a split's coming. I don't know.
yeah, if you can get in before the split announcement, as you even saw on Apple, it's just a gap up the next day. You don't even have to do anything. You just made 8%. You can get out if you want to.
Yeah, that's crazy. I know Amazon's funny. They had a little pullback back to, I think it was like 2,900 or so not that long ago. And I was looking at them like, this is almost reasonable.
Yeah, I
was
was.
bigger though. So yeah, let us know what you guys think of the strategy. Have you ever played any stock splits?
Once again, I disagree with this entire thing, but I'm going to do it. So
yeah, the real question is like, since you're kind of sure about your timeline and you want like a defined risk strategy, maybe this is a good opportunity for a call option.
Oh, that's a good point.
Yeah,
that's actually not a bad point at all.
The options get interesting though, right? Because if you did an option on Nvidia and it's a 4-for-1 stock split, correct?
Yeah,
you're going to end up with 4 options contracts at the end of this. That's what they'll do.
Or you do an out of the money call expiring in 4 weeks, hoping it gets to in the money, and then you sell it. True. Way more risky. Way more risky.
Way more risky.
It's got my name written all over it. So.
Yeah, exactly. They call him Dylan Danger.
Dylan. Oh, I'm going to make a shirt.
Love it. All right, guys. Well, thanks for tuning in. We'll catch you on the next one.
Have a good one, guys.